The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everybody. Basil Chapman, Tiger Technicians Hour. As you just heard, this is a show that is featured every market day, Monday through Friday, except we won't be here, of course, Thursday. And we're taking off Friday here at TFNN. So tomorrow will be the last session of the week. In the meantime, back at the ranch, I will be doing Daryl's show. That is the Nadex trading platform, diagnostic trading hour that Daryl does, usually 1 o'clock till 2. I'll be doing it today for him. And so it's a pleasure to be here 2 hours today. Let me do a couple of things here. One is I want to look at the Dow. I want to look at the S&P. I want to look at the Qs. I want to look at a number of things in a certain way, in a certain particular formation that is relevant only to the Chapman wave methodology. And one of the reasons is we have a possible recycle. We have a number of factors that are involved. So let me run the numbers real quickly on this 25th day of November. And you've got the Dow down 12 at 17,805. You've got the S&P down 3 at 2065. 2066. You've got the comp index at 4754. This is going to be very interesting. You have got the VIX index, which is at 12.89, slightly higher. The VIX is just beginning to awaken, and I'll explain what I'm looking at here in a moment. But most importantly, you've got gold. Gold is up 270 at 1198. Now, this is very interesting. Gold has had every opportunity to have a pretty powerful move to the upside. It has had a nice move to the upside. It hasn't really broken out. And man, let me do it now because I'm liable to say I'll show you the charts and then forget to show you the charts. So I'll do it right now. GCZ 14. I'm still using December. I'll go to the next month, maybe next week I'll do that. So it's trading at 1198, up 260. Most importantly, it's made a peak B. It's walking the 9-period exponential moving average in the daily. The 120-minute chart has basically got a sideways trading band. This is peak A, B, C. Oh, I had done that, and then I had a problem. I had to shut down the computer. So let me just do this. That's the low bar. That's another low bar. So you've got an A, you've got a B, you've got a C. I could start a little later, that would also be fine. You've got a D and then an E. So the 120-minute chart is saying, hey, rectangle formation, I need to break below 1186 to start moving more to the downside. I need to break above 1206 to really push to the upside. It's unusual for gold not to have had more of these 20 to 25-point moves up or down. Lately, it's been kind of tied in except for two big bursts to the upside. It's been in a very narrow range. So I'm watching this really closely in conjunction with the dollar index, which made a peak, a possible peak F, possibly also the Chapman wave stalk leg, just made the neck formation slightly higher at 88.27, pulling back. MACD is deflecting lower, stochastics at 76%. I'm inclined to think that this is a very important period. I said last week was a really important week, and you saw why. You saw that a number of factors happened. VIX pushed even lower. The general market went to all-time highs. You got the IWM, the Russell 2000, moving to the upside, in a sense, being a bit of a leader for a change. It was a leader to the downside, being a leader to the upside. Now, this is going to be very important. Why? Because I'm getting signals here that say there could be a change in trend. You could see the dollar start to pull back a little deeper and going into the 86 to 85 area. You could, I'm saying could, Why? We don't know for sure, but if you've got the indications that say you're in a possible inflection point, then you've got to be able to go with that trend. We've been raising cash. I've raised the stop in our long position, only long positions right at the moment. It could change by the end of the day, but right now only long. And I'm starting to raise cash because I'm considering there is going to be the general consensus has to be that we're going higher into the end of the year. Almost always when you survive September and October, the sharp declines that occur in that particular time frame, you run to the upside. And if you run to the upside, you usually close at, just under, or just over the all-time high of the year. Sorry, the yearly high. I meant all-time high only because in this case it would be all-time highs. Normally, it's the recovery highs of the year that you will be seeing. So what I'm looking at here is that there's a change, a possible change if bonds, which are moving quite nicely to the upside in leg C in the continuous contract. The TLT is slightly different. It is leg. Oh, it's also leg C. And in the 120-minute chart, it's A, B. Is that a C? No. A, B, oh, wait a minute, 2066, 27, 27. Okay, so this is C to the upside, holding very nicely, showing that there's a possible squeeze to the upside. We'll see what happens, but if bonds take off, at that point, the stock market will become a little bit more vulnerable. Now, historically, in the context of the time frame that I'm comparing the market to, there is enough evidence to say that you can get a really sharp rug pull at the end of November into December and then start a massive move in when everyone's finally said, just when I got it, oh, where's my cartoon? I'll try to find it. Just when I'm getting into the market, you get this major sell-off. The bass drum hits for the climactic last chord. And then you start, and then they give up. This is the final time they're going to get in until they squeeze into the market as it moves higher. So there is that possibility, and I'm going to say that that is something I'm entertaining right now. So, and don't forget, you've got high-grade copper, which is back under 3, not looking very good at all. And that to me is a sign. That is saying to me, don't get too, don't be naive here. You've been very careful. You've kept your subscribers on the right track for quite a while. You managed to reverse at the right time. This is going to be your biggest, this is me talking, this is your biggest challenge. What comes next is your biggest challenge. Why? Because it would be something that is quite unusual, because almost all the bears have literally thrown up their hands, let me hold up my hands, thrown up their hands and said, I give up. I'm even getting emails to that extent saying, I'm giving up. I can't go short anymore. And this is exactly the time. You must not be afraid to take short positions and put in a stop just like you would on the long side. I'm going to go to Mark in Fort Collins. Mark, how are you?
Good, Basil. How are you?
I'm well, thank you.
So I sent you an email yesterday, and I don't know if you got it, but you had talked about the RTH the other day as a possible short candidate, and I was looking at the XRT as a possible better short candidate, and I don't know if you got my email.
I got it. I read it on air. I can't remember if I read the actual email, but I mentioned on air that I had the email, and then by mistake, it's maybe on my other computer, I went and blipped it off. I got all this junk mail, so I just went click, 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 and I was going to ask you to just resend it. For 2 reasons. One is I just like to have it here as a record. I actually think I printed it out. Oh, you know what? I've got it right in front of me. I did print it out because I used it last night. This is really good. I'm so pleased you called. Let me go through a couple of things before you say another word. I just wanted to say that I got a really good email yesterday, and I discussed it on air. I talk about the RTH all the time. I do work on the XRT But I love the RTH because it's just one that I'm so familiar with. And actually, I like it because although the volumes are maybe it's a little different, but it has Walmart, Amazon, Home Depot, CVS CVS Caremark, Lowe's, Costco, Walgreens, TJX, McKesson, Target, and then the XRT, which is what you said that you're following more closely in terms of the weighting, has the Whole Foods, Casey's General Stores. You know, I done that work ages ago. I think once upon a time we had it as a long, and I was going to go long, and then I didn't keep it. I hardly ever follow it, and it always pops up as a name, Casey. So Tractor Supply Company, CST Brands, L Brands. What's L Brands? L Brands, I believe, is Victoria's Secret, HSN Inc., Zoomies, Ross Stores, Dollar Tree, and Group 1 Automotive. And I like the mix. Actually, I love the mix on both of them. Now, tell me what you're thinking.
Well, it looked like it was further along in your wave count as far as a potential short. I think the RTH was getting close to a D, and if it hasn't, I can't remember where we're at on that. And then the XRT looked like it was further along, maybe in the F.
Right now, it's in leg F, unless it's recycled. So let me just do this. I'm going to show, for those of you looking at my charts on Tiger TV, and now you can see them so beautifully. Oh, nice work. Tom has already pushed the levels, so our engineers have got fabulous graphics here. XRT is in leg D in the 120-minute chart. Now let me just move it away. It is in leg D in the... this is the Spider S&P Retail. Leg D in the monthly. The big question is this leg G/A in the weekly chart, is this a complete recycle for a brand new buy mode? And at this particular point, I have to put it more as a G, only because that would be the next letter. But the A is enticing because the stochastics at 93%. But this is the weekly chart. This is very important. Is a 93% in the weekly, and the MACD is expanding. It looks to me like if it pulls back, it fits this whole scenario that I'm looking at of a very short-term, very sharp, sudden pullback possibly occurring very soon. And then we get the speed, the relationship of speed as it relates to the corrections. The depth and the speed will be very important as they start to shrink, and it keeps pushing the level of support higher. That's if this weekly really is at a peak A, because then it shouldn't pull back. It's at 93.49. It should not pull back to anything, should not close under between 89 and 88. That should be tremendous support no matter what's thrown at it. And it is leg, at this point, I have no reason why I should not call it a leg F in the daily. I might change that in the next 2 days, but I am calling it as a leg F in the daily. And now, just so that you can see it as well, the RTH is in leg, oh my goodness, it's in leg C. There could have been right yet 67.45 and 67.51. I possibly could have called that a Chapman wave phantom peak and made this D to be ahead of the game. But the MACD and stochastic are so strong. I think there's just enough room to have a pullback maybe tomorrow, and then Friday or Monday we can make that leg D. And then the weekly chart is E, and the monthly chart is E. So now I've spelled out the whole thing. I'll let you go on with your thesis. Straight off the break. Can you hold on?
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about The Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive The Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back, and we're on with Mark. But Mark, if you don't mind, I just need 1 second to follow up on some emails. I'm bound to run out of time today. So let me just say, for the price line short, make it a 5-point stop. I wouldn't give it more than that because it did try to rally early this morning. I think it's going down. I think it's made a major top. There's just enough residual strength to make it make a 13-point move to the upside reasonable and then come down. That's what's kind of left in the strength. But, yep, I would say price line, well, if you got that short almost at the high of the day, then that's good. The other one was, Jane, the Netflix. I'm sorry I couldn't get back to you yesterday. I was going to say the time to short Netflix would be right here, but you got to put in a fairly tight stop at 365. Today it gapped down. It's down 8.63. The reason why I would have said, and I would have said only a small position, is because a chunk of the work is done and is almost getting ready to test support. So in a price as high as this, I don't like I want to see some decent price movement. You really want points. It doesn't turn out to be percentages. It's points you go for. So I'm going to say the same thing, that even now, my eye says that the 331 low, which is 17 points, 16 points, that's a big deal, is really the base of support that's going to be so important in the H pattern. I'll try to show it later on. But I'll do a little more work on this if I can. If I don't do it in this hour, I'll do it in the hour that I do in Daryl's show. And there are a couple other questions. So, Mark, now this is what I'm looking at. In the RTH, in relation to the just in wave count, the RTH, because I'm calling it C right now, because the MACD and stochastic are still good, but it's becoming really overbought. I think that there might be one little bit. I would even say that today's high of 69.45, I don't think it's going to go much higher than between 69.90 and 70.70. That's just what my eye is saying. Now I'm going to let you have the floor. You're thinking what?
Well, as you probably remember, a lot of times I'll use some of your recommendations and buy some, month or two out puts.
Yes.
So I was kind of trying to compare the put positions for RTH to XRT, and because XRT is a little more of a liquid security, I was looking more at some of their puts as opposed to the RTH puts.
Well, what you want, if you're going in for the options, you absolutely do want liquidity. I tell you why. I don't mind going into a put position when I feel very strongly that I've got a very identifiable focus for the price point of the stock itself, and because it is in a particular mode, there's a really good chance it's going to go there, because what would happen is eventually if it goes there, that price has to be followed and someone's going to come up to give you your price. But it's not like a liquid stock where you can on the spur of the moment just put it in and say, sell right here. That's a big difference when you're talking about percentage profit, because what you get for it ultimately, that's the bottom line. That's what your count is going to show. So I'm kind of with you that if you're going to go for the position, go for the most liquid. That's kind of the way you're looking at it, right?
Correct.
Okay. So now, have you done anything yet?
No.
Okay.
I wanted to kind of wait. I was kind of waiting till the RTH got to its D. The XRT looked like it had a pretty good. It's down almost 1.5 points from where it got to today.
Yes.
So I'm kind of wondering if it's going to retest that again, and based on maybe how I know they're different makeups, but what are your thoughts?
I'll tell you what my thinking is right now. Even with it down 41 cents at least a point off the high from today, the XRT, if you're looking for a put position, you would go to just January?
Either late December or January.
I'd be thinking, to be safe, I'd be going to January when all the buying from the holiday season is done, and then you'll still have a couple of weeks. That's number one. Number two is, because it's been such an incredible high flyer, my guess is that through the rotational aspect of any sideways correction, there'll be enough flurries that I don't think it's going to break between 92 and 91, possibly until maybe next week, if it does it at all, just before the Thanksgiving, just after, I'm saying, the Thanksgiving holiday. And then, of course, you still got the whole season of December. Now, this is a real tough. This is going to be very tough for me to do. It's going to be almost a situation where I have to say, based on all the evidence that I'm looking at, there should be at least a short-term pullback in both the retail, the RTH, and the XRT. That's the SPDR S&P retail. The RTH is the market vectors retail index. So I'm going to suggest you could start a small position, even if it's right now, because I don't see that much to the upside. It might turn out we don't see much to the downside. But if you're thinking, you could just do a little nibble right now because it's quiet and it's down just a little bit, and then we'll start looking at it next week again.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yes, just quickly checking here. Let me just follow up on that for a moment, because I need to also explain my thinking. Although there should be a very good selling season this Thanksgiving and Christmas time, and you've got the actually it's a seasonal time, because you've got the Jewish holidays as well as the Christmas holidays. I suspect that there's going to be a lot of discounting, and that they will have the numbers and they will have the sales, but the profits I'm not sure are going to be there. I don't see under these conditions this vertical rise that we've got, I don't see how it's going to continue in the weekly chart, at least without a decent pullback to regenerate energy. And that should take time. So at best, there's a little bit more to go to the upside. But at worst, we don't just make a sideways consolidation. You have almost a complete retracement of the weekly chart on the XRT. Either way, as I'm looking at it right now, I can see that there's possibly more upside. But if you go into a put position right now, small position, this is a starter position of a put position on the XRT. This is the SPY S&P retail. My suspicion is looking out to January that not only will we be back at the 93, 92 level on any rally, but you'll be closer to the 88 to the 87, maybe even the 85s at that point. This is just what my eye is telling me, and I'll be completely wrong if this weekly chart is saying, hey, you think this is a big move. What I was going to do, I don't have time for this now. No, I do have time. Let me just show you something. I'm going to do it real quickly because this is archive. You'll be able to slow it down and when you look at it, if you want, in the archive. Here we go. You've got Whole Foods Market. And I have to tell you, I go to Whole Foods a lot. I'm impressed with their not standing still. And although I can see they're making mistakes because they correct them, they move the fruits from here. They're doing so much in the three different Whole Foods that I go to from around here. Two of them are just a couple of miles either direction, I think that they've done a great job. I still think they're a tremendous outfit. They do not stand still. They're like the Starbucks guy. I mean, they are just determined to constantly reinvent themselves. And that costs them something at some point, because even the whole Star Market Shores are having so-called natural products. So, hey. There's a lot of competition out there. But so far, this rally has been very good. But I've got a feeling that Whole Foods is going to be pulling back, and the real effort is, how does it trade when it starts to retest the 41 level? It's trading at 48 right now. What's going to happen at that stage? And this is why I think the upside right now is very limited. This is what I'm thinking. Casey's, General Stores, Casey, C-A-S-Y. Casey made a peak D top right there yesterday. Look at that. I even notated it yesterday, but I didn't say that I need to get a peak before I can be convinced, because leg D's can continue quite a bit. Is leg C in the weekly chart and leg C in the monthly. So we'll see whether this repairs and eventually goes up to a leg D. But shorter term, it's been a real problem. Let's go to Tractor Supply. Gee, they're all over. So TSCO, I believe, TSCO, Tractor Supply Company. Yep, there it is. Leg D, as we speak. I must tell you, everything I'm looking at says, be really careful here. Yes, we could go up a little bit more, but boy, this is just one of those markets that's waiting for a surprise. I don't know what the surprise will be, at least for a shorter-term rug pull. Leg D, peak D probably today in TSCO. Look at that whopping leg A, just like Whole Foods in the weekly chart, and the monthly chart on retest the 78.17 all-time high. You've got L brands, LB. Oh, were they the LB? Oh, yeah, LB. LB, not LN, but LB. This is Victoria's Secret. Leg E, unless it's recycled. But everything about this is an E. It could even go to an F, but it's getting very toppy. And I didn't finish notating the weekly chart, but I suspect, well, look at this extension. This is almost parabolic. Oh, my goodness, look at this parabolic in the monthly chart. I'll do some work on it maybe do the break or maybe later on. But LB is, what did I say it was? L brands. And next is HSNI, and that is HSN Inc., whatever they do. And they're in leg F. Maybe they recycle to leg B, but I'm calling it leg F for now. Leg F in the weekly chart, leg E in the monthly. I'm getting a little extended. Everything I look at here. Zoomsy, In other words, I don't see this as being the start of a brand new calculation for an upside break to the upside break, because if it did that, what would happen, you'd be looking at these extensions, parabolic extensions, actually breaking out. Well, this really does look like a new A in Zoomias Inc. Wow. Is that the A? A, B, C. I don't know. All I can say is that it's had a spectacular move, and going back towards, trying to go back to the high that was made in 2012, around about the 42, 43 area. So I don't have too many negative things to say about these, other than that they should pull back. Ross Stores, big gap the other day. Leg C in the weekly. Leg C, 82 round number high, 82.01. Could be a phantom peak, but let's call it C for now. Leg D in the weekly, in the monthly. Look at that. Looks like a hot air balloon. Looks like one of those balloons that the little kid that goes to the party, comes back with the balloon, and then lets it go by mistake. And then it's up in the sky. And there's your little red balloon. Oh, my goodness. There's the red balloon right there. Well, yellow balloon now. Okay, so we're going to be watching Ross Stores. Tremendous effort there. Dollar Tree, DLTR. Same thing, big gap up to the upside, leg E in the daily, leg E in the weekly, leg something in the A. I think this is just a B. Whoa. Yes. Oh, my goodness. In my recycle. No, I shouldn't just put the arrow there willy-nilly. I should have done a little bit more work. I'm not sure what it is in the monthly, but it's spectacular. That's what it is. So I don't have any signals yet, but it is very extended. And Group 1 Automotive, is that GPI? Yep, GPI. Haven't done the work. It's leg E in the monthly. This might be a leg A in the weekly. We won't know. But, or leg A or... Look at that. A, B, C, leg D. Leg D in the weekly. So we've got to be a little careful. We've got to be a little careful. And I haven't done the daily. I'll do the daily right now. The daily is A, B, oops, yep, A, 85.81, 85.96. So that's A, B, C, D. This is an E to an F or an A to a B. We'll see. AB. So, okay, there's that doji candle. 2 doji candles are going to be watching this real closely. Hey, any day we could just suddenly have a surprise to the downside. But in the meantime, what we're doing, my opening call, is taking some profits, holding on as long as we can to some. There's some I'd like to hold as core positions, and so far they've done nicely, but they have to survive the next pullback. That's going to be the big test. All right, so now let me go right here to, okay, next question I had was, let me just turn around if you don't mind. So I said I'd do a little bit more work there's a question. EEM, what are my thoughts? EEM is the Emerging Market Index, had a very nice spike to the upside the other day. I don't think it's ready yet. I think it's trying to get ready for a rally. It's stuck with that 200-period moving average at 42.24, and it's trading right now at 41.94, having hit 42.46 yesterday, 2 days ago, pulling back a bit. I personally, if I was going to put a trade on, I'd put it on within now. I'd look for the low of 41.88 and the gap of the other day, 41.32, somewhere in there where that 9-period moving average is at 41.66 to 41.56, somewhere in here. If it can hold, and then I'd even give up a point. If it can go there and then bounce back above 42.08, that might be where I'm saying, okay, I'm prepared now to start a position. I don't want to buy it on the gap, on a pullback down, and I only want to buy it on strength. I would prefer to buy it closer to 42.24 if it doesn't pull back and test that 41.60s to 41.50s, that area. If it tests it successfully, that could be a nice entry point. So I would nibble if it goes above 42.35, but I'm not sure I'd do it right now. I really do think that buying refresh. What do you mean refresh? I'm refreshed. I think you need a refresh. That's what I'm thinking. I don't think there's any problem. Okay, so that's the EM. I had a question as well about, yes, Whole Foods looks nicest. Okay, I'm just running through a couple of questions here. I saw one that, the Apple chart. I'll go a little bit more into detail in Daryl's show, but yesterday in that time slot, I showed the 10-minute Apple chart, and what I'd said is there's an alternate wave count, and there was a chance in this naked chart of the Chapman wave rendition of Apple that right there, I called it an E, and then I said F/B. Because it had held so well. And look what happened. It went to a C, and then it went to a D. And D is this morning, the gap up at 20 to 10. It hit 119.75. Trading right now at 119.18. Not a big deal. Going to the sideways consolidation. I'll talk more about it in Dow's show. I'll talk about these 10-minute charts and how you can use them as a naked chart, that is. We all know what you can do when you have different technical analysis tools, analytical tools. Now, what I wanted to show you is this. Let me just find it here because this is so fascinating. Look at this. For my subscribers this morning, I showed them two charts. To me, they were absolutely shocking because the reference point was 1929 and 1934. And they fitted so incredibly the era that we're in right now. I must tell you, there is such a parallel that we've got to anticipate this market will go higher and that we've got to be prepared for a couple of really sudden, very sharp swoops to the downside. And those swoops might be where you want to do some scoops of some stocks that you've been waiting for a very long time. We'll see. But in the meantime, back at the ranch, look at this. This is the S&P with peak C correlations. And the only time that there wasn't a very quick top after a peak C was right there. That peak C that was made back in March of 2007 went on to an extended leg D, a sharp pullback, and then a leg E. Now I'm going to use the technical tools that we have with the beautiful renditions given by the HD performance of our charts at TFNN, if you're looking at Tiger TV. And it's this move right here. Peak C in the monthly chart of the S&P, March of 2007 at 1461.57. Pulls back, hits the 9-period moving average. It goes to 1363. Big move. About 1,000 points in the Dow. And then what does it do? It goes quickly up to a D. No, it goes 1, 2, 3, 4 months to a D. Pulls back right under the 9 EMA. Closes above the 9 EMA and then goes 1, 2 bars to the upside to the October 2008 high. What have we just done? We've gone from a C, gone to an extended leg D, right there. Because I've stretched it, you can't there. That's D right there. And this is leg E. So are we going to see 2 months and then it's all over somewhere into January? I don't think so. I think we've got another scary slide coming. And that's the one that's going to be the big test. That one was a peak E at the top in 2007. 2008 with a kind of a doji candle top, October, and at 1576.09, and that occurred just 2 months later. I don't think that this is the 1 month. It could be 2 months going into December. I'm going to be watching it closely, and I'll explain what the real issue is. Look at the technicals. You see the way the MACD held so beautifully there, and then right at the all-time high, it was lower in the fast-moving average, the green line, not the red line, but the green line. That's the right shoulder failure pattern, the Chapman wave. Look where the stochastic was, way down there. We have something very different now. Look how flat it is. Look how nice it is. I'll be back. Basil Chapman. Dow's up 12, S&P's down 1. Interesting market. We'll be back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. Dow's up 5, S&P's down 1 3/4. Remember, I will be doing Daryl's show at 1 o'clock. That is the Nadex, using the Nadex trading platform, Diagnostic Trading Hour. And I also want to just wish those who are starting to celebrate the Thanksgiving or leaving because of travel plans early, just a safe and wonderful Thanksgiving. It's a great, from the moment I arrived here, it was the first holiday I experienced, and it just, I've loved it ever since. non-denominational. It's just family, friends. It's peaceful, hopefully, and edible. I like it. So, looking at Facebook, that was the question that Dan. Yep, Facebook's having another rally. I just think it's part of the process. I think Facebook is. We were along Facebook. We're out of Facebook now. It's just struggling. I think this is going to turn into a monthly peak E, and that there's going to be consolidation into that 71 to 68 area. 69 is the 9-period moving average support in the weekly chart, in the monthly chart. That's the way I'm looking at it. Unless the rotation says, oh, we're going to come out of some of the high techs, considered a high-tech internet type stocks, and we're going to Facebook. But everything about the weekly chart, the monthly chart, and certainly even the daily chart, nice bounce, could even bounce a little further. A lot of resistance in the 76s and at 75.36 right now per $1.36. Now, I'm wrong if it starts to fill the gap and it closes above 76.88. If it closes in the 77.20 area, I'm wrong, and it's going to try to make another run for the highs. We're out of it. I don't see it right now. Maybe by the end of the day I'll have another look at it, because the MACD and stochastic definitely are giving nice signals on the daily chart first time, but there was nothing wrong with the first time since October. But that was different. That was a powerful move to the upside. This is a little more subtle. So, okay, that's Facebook. And if Facebook breaks under 70, closes under 74, there's a good chance it's going to go for a new lower lows on the daily chart. In other words, lower than the 72.51 most recent low bar. Another question I had, many people have been asking me about the VIX. I'm not going to give you a VIX call right now. I'm going to do a little analysis with the VIX, and that's about it. And then you're going to go to Chad for the options hour, and just a great options hour. Then I'll be back after that. So tune in if you want to listen to how to deal with options in a very logical, very clear format. Very nice. Does a great job. Now, we've got the VIX index trading at 1261. My suspicion is that the low of 12.38 that was made on the 10th of November, today's low is 1242. I think we're going to get close to it and maybe make one more little dip to the downside, and then I'm going to consider for subscribers if we're going to do anything with it, or whether or not there's been a recycle, a Chapman wave instant restart. What does that mean? It means the instant restart is on chapter 19, slide 346 in my book, chapter 19, right there. The instant restart. What does it mean? It's a really powerful tool. It's a powerful tool because what it does, it says within a very tight consolidation at the fourth highest peak, PT, certain things happen that allow you to go at least to a nicely stronger E/A, and then even to an F/B. In that point, other things can happen. But very often, the instant restart becomes an extremely important tool, and we've seen that in some of the weekly charts. That's why they've gone even higher. And that's why I'm not prepared to rule out that maybe instead of a G that we get in the Dow or the S&P, we're going to see an instant restart to the upside. The technicals that I look at consider that that's much more difficult to do. And then just as I'm about to go, because I can hear the music, Goldman Sachs needs a leg D. So many of these stocks are at D, or just need another squeaker to go to D. It needs to go above 192.68. It's just another 2.5 points, and then that gives you leg D. I'll be back in an hour, so stay tuned for Chad, and then I'll be back. Have a great day, and I'll also be speaking to Tom later this afternoon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.